Hello students, today we are going to learn non-profit organization. Welcome to Dr. B.R. Ambedkar Open University. In today's session, we are going to learn about a particular type of organization, that is non-trading organization. We also call them non-profit organization, non-commercial organization or not-for-profit organization. Names can be different, but the organizations which work under this category have the same nature. So, in today's session, we are going to learn about that what non-trading organizations are, what are the nature of feature of non-trading organization is, what are various source of income they have, what type of accounts are maintained under non-trading organization, and we'll have a brief about receipt and payment account. So let's start with what is non-trading organization. As I have told you before, non-trading organization are also known as non-profit organization. As the name suggests, non-profit means the motive of that type of organization is not profit. They don't work for gaining or earning profits. The main motive or purpose of such organizations is to serve the society, serve the community and people. The motive is service. The motive is the welfare of people. So, non-trading organizations are entities formed for social, cultural, educational, charitable or service oriented purposes. Whereas, if we remember the financial statements or the companies which operate in general, their main aim is profit earning. Without earning profit, they cannot grow, they cannot sustain. But in case of non-trading organization, profit is not the motive. They run for the service or welfare of people and society. The main objective, as we know, is not earning profit, means the aim or whatever operations they conduct in the organization doesn't incline towards earning any kind of profit. It totally works towards servicing the society. Various types of organizations comes under this particular category of organization. For example, hospitals, we have NGOs, clubs, schools, charitable trust. All these type of entities, they work towards servicing the people, servicing the society. So, profit is never the motive. Now, to understand non-trading organization better, let's see that what is the nature of it. First, it operates on service motive, not profit motive. It works towards providing the service, providing the help to the needy, to the people who are in need. So, the aim cannot be earning profit because the people who are in need may not provide the profits to the entity. So, the motive remains for the welfare of the society. Second nature is it is run by trustees, committees and governing boards. It is run by the trustees. There are people who start this type of organization. They form committees and there are some governing bodies who see the day-to-day operation of this type of entity. So, they run this organization, trustees, committees and governing boards. The board of member who actually run the organization, okay, are elected. Proper elections are conducted for appointing the board of members. For this type of organization, there are no employees, there are members, there are people who voluntarily join in this type of entity, who become members. Now, let's say there is one NGO for which there are 100 members. Now, these 100 members cannot run the business altogether because then it will become a chaos. So they have a governing body, they have a governing board which runs the operation of that particular entity. How that governing board is decided? These members of that particular organization, they come together, an election is conducted, and through election the board is decided, and further that board is going to take care of the operation of the entity. We need to keep one thing in mind while understanding non-trading organization, that all the members who are part of this type of entity, they are not paid any salary, or they are not rewarded with any share in profit or surplus. They will only work voluntarily in motive of providing service. So this governing body who runs the operation of this entity, they do not get rewarded with any kind of monetary benefit. Instead, they have to just provide the service and see the operations of the. As we know that this type of entity doesn't work for profit, but because they are getting the funds from various sources to run the organization, at the end there will be some surplus. We don't call it profit, we call it surplus. So in this type of organization, there will not be any profit, but there might be some surplus. Now in general organization or a normal company or any entity, what happens? The profit is divided among the members. But in case of non-trading organization, these profits are not distributed, or the surplus is not distributed among the members. Instead, it is reinvested in the running of that particular organization. For example, let's say there is one NGO who got some surplus of funds in a particular year. Now that surplus will not be distributed among the members. Instead, that surplus will be reinvested in running the operations of NGO and growth of NGO, so that more people can get benefit out of it. So no distribution of surplus in the members. Members have to work voluntarily to serve the society. Funds, how these type of organizations will get the funds, from where they will earn? So these funds come inside the organization in form of subscriptions, donation, grants or fees. Subscription from the members. If someone want to be member of that type of organization, they have to pay membership fee. It can be one-time payment for lifetime membership or monthly subscription, yearly subscription. So they have to pay subscription fee to be member of such kind of organization. Donations also it receives from the people who want to donate for the right cause. They can also give money to these type of organization. Grants from central or state government also support these type of organization, and there will be regular fees to avail the service of these organization or entities. So these are the few sources, or we can say a way of how funds flow inside NTOs, non-trading organization. Now let's move to understand the key features of the non-trading organization. The first feature is separate legal identity or separate legal entity. NTOs, non-trading organizations, have separate legal entity from its members. It is not dependent on who the member is. As we know that there is a voluntary admission or voluntary membership for this entity. So people, whenever they want to be part of this organization, they pay the fee and become member. Whenever they feel that they want to be member of some other organization, or the purpose of being in this organization is fulfilled, they can stop paying or withdraw the membership. So members can go or come, members inflow and outflow can go on, but it will not impact the identity of this type of organization. The identity of the organization will be always separate from the members who are operating it. So it has separate legal identity, and this type of organization will be a artificial person in eyes of law. Second, voluntary membership. As we know that the members who become part of this organization are never rewarded with any kind of monetary benefit. So if someone's motive or purpose is to provide the service to the people and society, they come and become member of non-trading organization. So membership is voluntarily, from your own will you can become the member. Third, non-profit objective. Objective is never to earn profit, but there can be some surplus which can be reinvested in the organization. Use of funds strictly for organizational goals. Whatever earnings the organization will have in within the running of the business, it will be reinvested. The use of funds will be strictly for the organizational purpose only. Not a single rupee will go outside the organization to benefit anyone else but the society. So the use of fund is restricted only towards that particular non-trading organization. The maintenance of special accounts are prepared so that the contribution or any kind of expense can be monitored. There are a separate set of accounts, separate set of statements are prepared to monitor that how much contributions are received from various people and how these funds are used to serve the society. So all the expenses and contributions or the funds which are received incomes are recorded in special accounts. In case of general organization, we have seen that financial statements are prepared to monitor such things like trading account, profit and loss account, manufacturing account, balance sheet. But in case of non-trading organization or non-profit organization, there are separate special accounts like income expenditure, receipt and payment, balance sheet and so on. Now let's understand what are the various sources of income. In this, we'll learn that from what different sources funds come inside the organization. What are the various sources through which funds come or invested in the organization? The first source of income is member subscription. The members who subscribe to be member of the organization, they have to pay a fee. They have to pay a subscription amount to subscribe the services of that organization. So membership subscription fee is one of the source of income. It can be yearly, it can be for lifetime or monthly. It is decided by the board of members. Next is donations and charity. The funds flow inside non-trading organizations through donations and charity as well. There are two types of donations. One is general donation, another one is specific donation, and there is one third type of donation as well that comes as legacy. Now let's understand what these three type of donations are. The first is general donation. General donations are not specified for a particular need. It is like someone just paid the amount or donated some amount to the organization for its normal operation. These type of donations will be treated as general income and will come in the income and expenditure account. But in case it is special donation or legacy, special donations are certain type of donation which are made for a specific purpose. Like for example, there is a charitable hospital which runs to help or provide the services to the needy. Now one person donated a very big amount to this charitable hospital to buy one MRI machine. Now this donation is made specifically for buying a MRI machine, right? So in this case, this donation is specific and once in lifetime kind of donation, which will come under the category of capital donation, because this MRI machine will be considered as asset and is going to be there in the hospital for a very long period of time. So this type of donation made for specific purpose will be considered as capital donation. The third type which we discussed is legacy. Legacy, if we have to put in simple terms, we can say donations through will. For example, if someone has written down their will that they are going to donate their property to the charitable organization post their death, that means the will come to, or the money which is there in with the person will be transferred for this charitable organization. So this will is known as legacy in terms of accounting. So donations we know are of three types: general donations, specific donations, or legacy donations. Then comes charity. Charity are form of donations only, means for the purpose to provide any service or to serve the society, some amount is gifted to the organization, which is considered as charity. Government grants. Government grants, if some organization is working towards the society in the same line where government also is working, then government provides some grants to the organization. State government or central government provides the grants to these type of organization if the particular organization is working in the similar lines where government also wants to work. Next is entrance fees. Now there will be so many people who want to avail the service of these type of organization, but they are not members. To avail the service, they have to give some entrance fees. Now this entrance fees also can be one time, or it can be for every time they want to avail the service. Let's say there is a library, a common society library. This library is run by the members of that particular society, but not every person living in that society is the member of the library, but they want to avail the service. They want to avail the service of going and reading over there or borrowing books. So library is open for all. So the person who wants to avail the service of library has to pay an entrance fees. This entrance fees is considered as source of income. So every time someone comes to avail the service of library, they have to pay an entrance fees. Next is special funds. Special funds are received for special purposes like sports fund or prize fund. It is event specific, it is occasion specific. If for a particular event or particular occasion some funds are received, it will be considered as special funds, and the amount which is received for this specific purpose has to be utilized for the specific purpose only, and whatever is remaining will be considered as surplus and will be reinvested in the organization. And the last type of source of income is income from investments. With the surplus money, if the amount is the surplus money, if it is invested in some other type of investment to earn something more which can help the organization grow, so any income from these investments will be source of income. Interest can be considered, the dividends can be considered for the source of income. So there are various sources of income through which the non-trading organization earns money. These are member subscriptions, donation, charity, government grants, entrance fees, special funds, and income from investment. Now let's see that what type of different accounts are being maintained by non-trading organization. As we discussed that non-trading organizations are different from the general profit-making organizations. The profit-making organizations, they prepare financial statements where they prepare manufacturing account, trading account, profit and loss account, and balance sheet. Similar to that, the non-trading organizations also prepare their own financial statements, but it contain different set of accounts, special accounts. These special accounts are receipt and payment account, income and expenditure account, and balance sheet. These accounts track the cash inflow and outflow from the organization, the performance of the organization, and it also checks the financial position. Now let's understand the receipt and payment account. As we know that receipt and payment account is a specialized account prepared only for non-trading organizations. So receipt or payment account is very similar to the cash account or the bank account we have prepared for general organizations, general profit making organization. Receipt and payment account perform the same function. It has two columns, one is receipts, one is payment. So irrespective of that what time or for what period a particular amount is received or paid, it will be considered the inflow and outflow of the cash, and it will be recorded in receipt and payment account of that particular year. So receipt and payment account, it gives a summary of all the cash and bank transactions for that particular year. It shows all receipts on the debit side and all the payments on the credit side. So whatever amount we are receiving, it will come under the debit side of the account on the receipt side, whereas whatever amount is being paid or going outside the organization will come under the credit side, under the payment side. Regardless whether the amount is related to current year, previous year, or any future period, if the cash has gone out or has come in, it will be recorded in receipt and payment account. What are the features of receipt and payment account? First, it follows the real account criteria, means debit what comes in, credit what goes out, and all the transactions are recorded on cash basis, means only the cash transactions will be recorded in receipt and payment account. If something is in credit, something which is not involving the cash inflow and outflow will not be considered in this receipt and payment account. It includes capital and revenue items. It includes every type of transaction which involves cash, whether it is capital, whether it's revenue, it doesn't matter. It has to be recorded under receipt and payment account if any kind of cash related to it has gone out or has come in. Records cash in bank transactions only. No adjustment entries are made. In the receipt and payment account, no adjustment entries we have to record because we are writing the overall inflow and outflow of cash. So, adjustment entries are not made in the receipt and payment account. Why receipt and payment account is important? What is the main need of preparing receipt and payment account? It helps monitor cash inflow and outflow. As we know that non-trading organizations are not running for profit, but they need to make vital decisions related to operations of the business, and they have to keep an close eye that where the funds received are moving. So the funds movement which we can monitor through inflow and outflow has to be carefully monitored. So this receipt and payment account gives a very big and clear view of that how cash is being moving in the organization. So it helps us monitor the cash inflow and outflow. It assists in budget preparation. It helps us prepare the budget based on how much cash we have. So if we have to invest, if we have to put the money in particular area, it is useful for us to prepare a budget accordingly if we know exactly how much funds are available with us. It is used for internal financial control. It also helps in controlling that how financial movements are happening inside the organization. Then we also know that in non-trading organizations we also prepare income and expenditure account. So receipt and payment account helps us preparing that income and expenditure account as well, because through income and expenditure we can give a right picture of inflow and outflow of funds. And lastly, it ensures that all the transactions which are happening in the organization are transparent and these are accountable. So it sets the transparency and accountability. So the person who is handling the cash in the organization is accountable of monitoring and keeping records of all cash and bank transaction. So we know that receipt and payment account is very vital for non-trading organizations because it monitors inflow and outflow of cash. It helps in preparing the budget. It also keeps an eye on the financial control. Then it assists in preparing income and expenditure, and it sets the transparency and accountability in the organization. Now let's see that what are the steps which we have to keep in mind or how we can prepare receipt and payment account. So it is, as we know, that is very similar to cash and bank account. So we are going to prepare a ledger account of two sides, debit and credit side. Debit side will be for all the receipts, credit side will be for all the payment. So first we have to give the opening account, opening transaction, that is cash and bank balances. We need to write what are our cash and bank balances. All the cash receipts we are going to put on debit side and all the cash payments will go to credit side. It will include both capital and revenue items, and it will exclude any kind of outstanding or prepaid items. If something is outstanding or something is prepaid, it will be excluded. And finally, after calculating both the sides, balancing amount has to be inserted. Now there is a format for receipt and payment account. So in receipt side, what all we can write? The opening cash and bank balance, subscriptions, donations, entrance fees, sale of asset, interest received, any kind of miscellaneous receipts, all these will come under receipt side. Now where we can pay the cash or where the cash is going to have outflow, salaries and wages if we are paying, rent and electricity, stationery, postage, repairs and maintenance, purchase of asset, miscellaneous payments, all these will come under payment side. So there is one example of receipt and payment account. Let's say the cash and bank account, the opening balances which is coming from the previous year closing balance. Let's say it is 15,000, subscriptions for the year were 25,000, donations were 10,000, sale of old newspaper 2,000, interest received 3,000, miscellaneous receipt 1,000. Total of receipt size is 56,000. Now in payment side, we have paid salaries and wages 20,000, rent and electricity 8,000, stationery 2,000, postage 1,000, repairs and maintenance 4,000, purchase of printer 6,000. Total of payment side is 41,000. Receipts were 56, payments are 41. That means we have left with 15,000 of cash in our account. That will come as closing balance for the year. Closing balance will be the balancing account. So to conclude, we can say non-trading organization play a very vital role in society by providing essential service without looking towards the profit making. Their financial statements include receipt and payment account, income and expenditure account and balance sheet. It helps to ensure proper accounting, transparency and efficient use of funds. To summarize, we can say that non-trading organizations, also known as non-profit organizations, are the organizations who aim towards providing the service, not making the profit. They don't aim to make profit, they only aim to provide the service to society, people and members. These are separate legal entity from the members. The board of members are elected from the members. The members elect, they go through a election procedure and select the board of members who run the operation of the organization. Then there are three type of accounts which are prepared for non-trading organization. Those are receipt and payment account, income and expenditure account and balance sheet. Receipt and payment account only records cash and bank transaction. It only records all inflows and outflows of cash from the organization. Income and expenditure account works on whole transaction, all the transactions on accrual basis to record the transaction, and there is balance sheet which shows the financial position. So in receipt and payment account, when we are doing cash inflow and outflow, there are two sides to it, receipt side and payment side. Receipt side, we write all the receivables, all the amount which is received, and in payment side we write all the amount which is paid during the year. So with this we have come to the end of this session. Thank you.